If we look at sort of the ecosystem we have Afterpay, which is now part of the larger Cash App family. Cash App has 58 million people who use our service every single month, the majority of whom don't have a credit card. And it's not because they don't want credit. It's not because they don't need credit, right? Like credit has existed since the dawn of civilization. People just want credit in a form that feels fair and transparent.
All right, guys, the holidays are here. Money is tight. And at the end of the day, if you want to know how to spend money wisely during the holiday season, look no further. I have called in a true heavy hitter, my guy, Tanuj Parikh, who is head of commercial of North America for Afterpay and Cash App. Financial Freestyle starts now. Tanuj, how you doing, brother?
I'm doing excellent, Mac. Thank you for having me.
So listen, man, you guys just put out a holiday insights report showing obviously shopper sentiment as well as spending plans. What can you tell us about what you guys have found?
Yeah, I'd say the kind of headline news is the holiday spirit is alive and well, right? Like this time of year, it's always a little stressful. You got a lot going on. Obviously, it's been a tough kind of macro environment for everybody over the last year and change. Despite that, what we're seeing is like people still want to hold on to that holiday spirit. So we're actually seeing about a quarter of Americans are saying they're going to spend $1,000 this holiday season on gifting, which is actually up from 18% last year. And people are just trying to be smarter about how do they spend, right? So whether that's using a tool like Afterpay to split out your payments and have more flexibility, whether that's waiting for the right sale, whether that's actually spending on themselves for a little bit of care, the holidays are really alive and well.
I love that. I love that. And I read some of the report where it was saying, 38% of consumers feel more stressed than they did last year. 35% are anxious when it comes to, kind of covering holiday costs. Yet people are still spending money. And so let's actually talk about Afterpay. How is this becoming a solution to many of the users right now, or, buy now, pay later as a whole?
Yeah, what we've seen over the last few years is Afterpay and BNPL has really gone mainstream. So if you look at holiday season last year, it was the first year where people spent, particularly in Gen Z, spent more using BNPL than they did on credit cards, and we're seeing that accelerate even this year. A lot of that's driven by Gen Z and millennials sort of coming of age during the credit crisis, seeing what credit cards did with their parents, and wanting to have a simpler, fairer, more transparent way to spend their money. And that's where Afterpay comes in, right? We let you split your purchase into four interest-free over 6 weeks. And it's not about borrowing money you don't have. It's about sort of smoothing your cash flow between paychecks so that you can sort of spend on the things you want to spend on, and you can still do so responsibly and transparently.
So I love the way you said it, right? Afterpay is about splitting your money over four payments over 6 weeks, right? And obviously, you being in the industry, you've obviously seen some of the negative headlines when it comes to kind of buy now, pay later, where it's one, it's extremely convenient, yet it can be slightly risky in leading to consumers overspending. Where do you see one Afterpay being in this position where maybe they need to help consumers when it comes to financial education, or, is the data actually not showing people overspending?
Yeah, so we don't see the overspending, right? And from day one, I think what's important to recognize is that we sort of had the consumer front and center in everything we've built, right? So everything we do is around not trapping a customer in a cycle of revolving debt like you can have with traditional credit, but instead saying, can we offer you something that lets you stay in control? And what we see actually on many tens of billions of dollars in Afterpay volume over a decade plus at this point is 96% of our installments are paid back on time. 98% of our purchases don't incur a late fee. And when we looked at the data a little bit more closely over the last few years, we think we've saved customers close to $1 billion in interest and late fees that they would have otherwise incurred if they had used sort of more traditional forms of spending.
That's interesting. So let's look 5 to 10 years down the line, right? When you just literally said, hey, we're saving customers thousands of dollars, I'm sorry, over $1 billion in, interest and late fees, et cetera. Where do you see 5 to 10 years down the line where it comes, buy now, pay later versus credit cards from a market share standpoint? What do you think consumers, are going to be using down the line?
I think, we already see it pretty clearly in the data, right? Younger customers, again, younger millennials, Gen Z, have a strong preference for BNPL over traditional credit. If we look at sort of the ecosystem we have Afterpay, which is now part of the larger Cash App family. Cash App has 58 million people who use our service every single month, the majority of whom don't have a credit card. And it's not because they don't want credit. It's not because they don't need credit, right? Like credit has existed since the dawn of civilization. People just want credit in a form that feels fair and transparent. They don't want to be on a credit card whose interest is not aligned with yours, right? Like a credit card wants you to miss payments because then they charge you APR. It's revolving. You're sort of trapped in a cycle that could go on for years. What we're trying to do is say, again, put the consumer really at the heart of what we do, give them that access to liquidity, but do it in a way that where everyone's sort of interests are aligned. And so we only expect BNPL share to continue to grow against sort of traditional credit cards. And one of the things we're really excited about is that when you look at a younger customer, it's a very debit heavy audience, right? People love their debit cards. They like to spend on a debit card because again, it gives you that control. You know exactly how much money is in your account. You sort of spend against that. You're not overextending. We're bringing BNPL to the Cash App card. We've already started earlier this year, and then we're expanding it right now. And we think that's honestly going to be like the best form of credit that's ever existed, which is, hey, you have a debit program, which is the fourth largest one in the country with Cash App card. People have money in their account, and we give you the flexibility to spend that responsibly, rather than again overextending and revolving. So to answer your question, I think it's really we only expect BNPL market share to grow. Will it surpass credit cards in short order? Realistically, no. But credit cards have been around for 50 plus years, and so there's there's a lot of history to sort of catch up on. But the demographic shifts are really clear.
Nice, nice. That's interesting. My question, right, is we started this with your report, right? And
Yep.
the findings of your report is that the consumer is still, sure, there may be concerns, but they are willing to still spend money, right? Over a quarter of the people are going to spend $1,000 for holiday shopping. And I also saw that they're spending earlier. So they're thinking about, actually budgeting for, holiday spending. But I need you to help me out, right? Help us understand where this money's coming from and how people are able to afford it. And the reason I say it is because when we see, more people using BNPL, when we see credit card balances still at all-time highs over $1 trillion, inflation, rising costs of goods while, wages are not keeping up. Like, how are consumers still spending money? And this is on the back of Black Friday hitting records, Cyber Monday also hitting records. Like, how are people spending money? I'm just trying to understand. Is this like people kicking the can down the road, or like what's actually happening?
Totally. Yeah. I think I don't think it's people kicking the can down the road, right? Again, like when we look at our data and people actually being able to repay on time, not incur late fees, like this is money that people have. It is about smoothing out that curve between, again, sort of cash flow and income. And again, when you look at our customers, a lot of them, are not traditional W-2 earners, right? So they're not people who are being paid on a traditional every 2 weeks. This is when my paycheck is coming in. They might be gig economy workers. They might be independent contractors. They might be freelancers. They might be a sole business themselves. And so their income is a little bit choppier. And so you use a BNPL service to say, hey, I'm going to smooth that cash flow. I know I'm good for it. I'm betting on myself. I know I can sort of do this responsibly, but I just need to have a tool that gives me that transparency and that flexibility. And so, yeah, certainly there's obviously, there's been a lot of like macro pressure around wages and costs and all these sorts of things. But very much what we see in our customer base is like they're spending money they do have, not going beyond their means.
And so this is pretty interesting for me. I know there was, and I'm not sure if it's actually went through, and maybe you could comment on it. But I know when it comes to kind of the gig economy, one of the things that was being said kind of in the Cash App, Venmo space, et cetera, was that for payments or anytime you receive money over like $750, you're now going to have to report that to the IRS. And you're talking to a guy who pays his barber using Cash App every few weeks when I get a haircut. Do you guys see that as potentially a problem, or kind of what are consumers thinking about for the people, to your point, that are maybe traditionally underbanked that are using Cash App as their 1099 income?
Yeah, we've spent a lot of effort sort of over the last few years trying to evolve Cash App beyond, everyone kind of knows us or starts on us overwhelmingly for peer to peer, right? Exactly that use case. If you got to pay a friend back, you're paying somebody in your neighborhood for something. And what that's still sort of our bread and butter. What we've really grown into is like a full suite of financial services. And so now you can actually like fully bank on Cash App where you're getting direct deposit, you're doing your taxes, you're investing in stocks and Bitcoin. And we're spending a lot of effort around, hey, how do we build that suite for what we call the independent earner for someone like your barber, right? Who needs to get paid, and how do we give them the right tools to get paid, whether that's digitally over P2P, a paycheck, someone swiping or tapping a card. And so we've got sort of these offerings for those people that kind of work within the confines of whatever the government says is like the appropriate regulation for how these things are sort of going to get reported. And so we don't see any sort of dampening around people using our service for their needs. In fact, we're like doubling down on exactly the kind of person that you're talking about, right? Like your barber who wants and needs a better financial service than they might be able to get from the brick and mortar bank down the street.
Nice, nice. I mean, it's very evident that, there is a need, right? We talked about it earlier, right? There is a group of people that are traditionally underbanked, and Cash App effectively is a solution. So let's actually talk about how Cash App is truly revolutionizing the digital banking world, right? And getting people that obviously may not have used these bulge bracket banks to now doing everything digitally. Like, how are you guys continuing to revolutionize and gain the trust of users?
Yeah, I think the thing we're most excited about recently, we just announced last week, or sorry, last month, is what we're calling Cash App Green, and it's our first ever sort of premium banking status program. And the way it works, which we think is really sort of aligned with our customers and their needs, and again, the needs of sort of this like modern day independent earner who's a little bit younger, is rather than it being like a membership based model that's based on you paying in, it's actually just based on your activity in the platform. And so if you're bringing in paychecks or income to a certain amount, if you are spending a certain amount with our spending tools, whether that's Cash App Card or Afterpay, you then qualify for what we refer to as green status. And then you're getting essentially a supercharged version of Cash App. And so your interest savings rate, for example, goes from 1.5% to 3.5%, which is industry and market leading for both fintechs and traditional banks. You get access to our short-term lending product called Borrow, which is customers love, and again goes to the need of like people need liquidity, and if you have like an emergency, right, your car breaks down, you need $200 to be able to fix that engine, and you can borrow that from us on really responsible and fair terms and pay that back over a few weeks. And so we're sort of taking every like major financial service that you'd think about a bank offering you, and then we're packaging it all up inside this mobile application that people love, putting it on top of this massive P2P network with 58 million people. And it's just this really differentiated offering that really serves a modern day customer. And so increasingly, we just released in our earnings, we have over 8 million people who think of us as their primary bank. And we have ambitions to take that way further, right? People who spend with us, save with us, invest with us, because we think there's a huge need in the market across all of these different jobs to be done.
That's epic. Look, guys, we got to take a quick break, but when we come back, we're going to have more with Tanuj Parikh of Cash App and Afterpay. All right, guys, welcome back to Financial Freestyle, where we are talking to Tanuj Parikh, who is head of commercial of North America for Cash App and Afterpay. And one of the things you said right before the break was that you guys are looking and seeing about 8 million people or so that are looking at Cash App as their primary bank, right? And you obviously see more growth in that. So let's actually talk about that, how you guys are becoming a one-stop shop. You have the ability to get loans, buy now, pay later, uh, you know, have access to, debit card, etc. But also let's talk about investing. You can own stocks as well as crypto. Can we talk about how, not necessarily how that came about, but what's the growth and kind of what percentage of consumers are actually utilizing Cash App as their investing arm?
Yeah, it's about several million people out of the total audience who are either using us for Bitcoin investing and or stock investing. And I think like the stock, our sort of stock feature is an example of how we're trying to take traditional financial services and make them accessible to more Americans who maybe previously weren't able to do so. And the way we did that was pioneering this idea of fractional investing, which is saying, hey, a share of Apple might be $1,000 a share or whatever the price is. That's a lot of money for a lot of people, and maybe that's unattainable for you today, but you still have an ambition to start to invest in yourself, to build savings over time. And so we let people actually invest as little as $1 to get a fractional share of Apple. And so as they're starting to get income, as they're coming up the income curve, as they're saving, we make these things that were traditionally hard to do, through a legacy brokerage, and we make it accessible to everyone, and we do it automatically. Or another thing that we sort of pioneer is that if you bring your paycheck into Cash App, every 2 weeks or whatever it is, you can automatically distribute that between different buckets. So you could say, hey, I'm bringing in my paycheck, and every 2 weeks, I want 50% of it to go into my Cash App checking account, my balance. And then I want the other 50% to be automatically invested in my savings account, in the S&P 500, and in a little bit of Bitcoin. And so we give these tools to people, and there's no other banking provider, again, legacy or fintech, that has that kind of automatic distribution. And so we take kind of the friction out of these things for people, and we make it really intuitive. We make it really accessible, and we think it serves a really big need for customers that need financial services.
Yeah, without a doubt. Let's actually talk about kind of your checking account feature. You guys, my understanding is you kind of what's the interest rate on that? Is it high yield effectively?
So yeah, exactly. So we've got sort of, if you have money in Cash App that's in your balance, that's the equivalent of being in your checking account, and then we have a separate savings account that you can sort of open up for free, no fees on it, and then you can sort of port money in and out, back and forth between those two. Within savings, you can set up specific goals if there's things you're savings for, right? Your next big vacation or rainy day fund, whatever it is. And then you can sort of auto distribute, like I said, paychecks and money coming in, going into your savings account. On your savings account, there's different levels of interest you can have. So I think it's about 1.5% today if you're sort of just a general customer. And then for those green customers, it goes up to 3.5%, right? Which is industry leading.
Nice.
I think from the launch of that product, which was April 2023 to today, we've got more than 3 million savings actives on the platform, right? So a lot of people starting to use that product to be able to set up savings and invest in themselves.
I love it. And so I have a question, right? Like when you look at who your competitors are versus your peers, right? Like we're starting to see Apple, Amazon, and Google all effectively kind of creeping into the digital banking space. Do you look at big tech effectively as your biggest competitors moving forward or potentially partnering in the future?
Yeah, the fun thing, like the reason I love kind of working in this space is that it's a lot of gray, right? And so big tech, other banks, like you can be sort of competitive one day, you can partner another day. I think a really good example is for Afterpay. We announced last year and then earlier this year partnerships with Apple and Google. We're actually putting Afterpay inside the Google Pay and Apple Pay wallets. And the reason we do that is because we just want to be top of wallet and serve our customers wherever they are, right? If the point of Afterpay is we want to give you access to fair credit, and you as a customer have a preference to go use Google Pay as the way you want to pay for things, then we should show up there, right? Like we should do the hard work of figuring out that partnership so that we're serving that customer however they need to be served. Um, and so we look everywhere to sort of think about how do we partner with anyone in the space, whether that's big tech or traditional sort of banks, in service of the customer. And ultimately, like the truth is like there's room for lots of players. The thing we're focused on above and beyond everything else is like who's our customer, what do they need, how do we build the right things for them, build those fast, and everything else kind of falls into place.
That's awesome. That's awesome. Let's go back to buy now, pay later, because my understanding is this year it was rolled out nationally where buy now, pay later is now being reported to the credit bureaus. And, I've had interviews with people that were talking about kind of like traditionally the credit bureaus didn't incorporate certain things that traditionally, lower income people didn't get access to or better yet benefit from just simply paying their rent on time or
Yep.
paying their Netflix subscriptions on time. So let's actually talk about how buy now, pay later being reported. And obviously, clearly, you talked about what I think you said 98% of your customers are paying bills on time. Like, let's talk about how this is actually good for your users.
Yeah, so there's certainly been a lot of conversation, both in the U.S. and then other markets where we operate Afterpay around regulation, around credit reporting. What does that mean? How do we do that in a way that makes sense? So in the U.S., there was, the folks in Washington were looking at should BNPL be reported to the credit bureaus. It is not today, actually, and so there's no government mandate around doing that. We at Afterpay and at Block and Cash App, we don't actually report to the credit bureaus today. And the reason we do that, and our team was actually just in DC a few weeks ago for DC FinTech Week, talking to policymakers, is because not because we're opposed to regulation, we actually welcome it. In other markets where we operate, like Australia or the UK, where BNPL regulation is a little bit more or a little bit different than the US, we are sort of reporting and working with the bureaus there. The thing we want to be careful around, Mac, is if we report, we want to make sure it doesn't hurt the customer. And so today, the way the credit bureau system is sort of set up is that it's really geared towards traditional credit cards and a 30-day pay cycle. And because Afterpay, happens over 6 weeks, and a customer is paying back with high frequency, and to your point, is paying back, overwhelmingly on time. The way the system works today is if we reported that, that would actually look worse on that customer's credit score.
Mm.
Um, which isn't right, right? And again, gets back to we had the customer first, and so we're having a lot of constructive conversations with the folks in DC around what's the right way to do this. Because we're happy to do it, we just want to make sure it's in service of the customer.
All right, so Tanuj, my question is this, right? Like, there are a lot of people that are giving buy now, pay later some negative press, right? No matter, if it's different financial publications or even the financial gurus of like the Dave Ramsey's of the world. Where are most people that talk bad about buy now, pay later actually getting it wrong?
I think it's a lot of what we talked about here, which is our customers are not using BNPL to overspend and go beyond their means. They're using it as a cash flow management tool and a modern day version of credit, right? Our customers, there's a real generational breakpoint of younger customers do not want traditional credit cards, don't feel well served by traditional credit cards. Yet again, everybody needs credit. Credit is a good thing to make the economy work. And it's about how people are shifting to tools that they feel are better aligned with their interests. And overwhelmingly, I think the thing that happens in this narrative is people don't know the stats that we've talked about today, right? 98% of things are paid back on time. 96% of people aren't incurring late fees. We're not trapping people in cycles of debt. We're giving them the flexibility to live their lives on terms that make sense for them.
I just want to say thank you for being here, brother. And that's it for this episode, ladies and gentlemen. Make sure you like, subscribe, tell a auntie, tell a friend, tell a cousin to watch this episode. And until next week, guys, this is Financial Freestyle here on Yahoo Finance.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.